Thanks for stopping by my daily market report. My name is Mike, and this market report is about mortgage rates. What goes into impacting them on a daily basis. Uh, we don't get into rate quotes. We get into what the trend lines, kind of where rates are up or down any particular day, if they're kind of trending upwards or downwards, what to watch out for the week. We get into those different areas. There's a lot of other places you can go for rate quotes and stuff like that. There's a lot loan programs out there, and each have their own specific rates, as well as a lot of variables that go into determining those rates. So that's particularly the particular reason why we don't get into that on these videos here. So if you guys would like to have something like that, please feel free to reach out. I am a loan officer. I do work with the national lender, so I can help you with rate quotes if you need anything of that sort. We can certainly help you out with buying a property and getting you pre-approved. We can also help you with refinancing a property. So if you're looking to take money out and do something with that, or if you're looking to get a shorter, like better interest rate, or go from a 30-year to a 15-year or something like that, we can certainly help you out with those as well. So without further ado, why don't we jump into this report, and we'll start with the economic reports. As you can see here, we've got quite a few highlighted, and we'll start off with the Case-Shiller Home Price Index. So the first two will be home index prices, and this will be month over month. So for the month of March, we start off with April, it was 1.2% month over month increase. Forecast is supposed to keep that same trend. However, it had more of a spike in the month of March at 1.6%. So its year over year went from 11.9 revised higher to 12%. So forecast called for 12.3%, and it jumped up to 13.3% according to the Case-Shiller. Now, another one here is the FHFA Home Price Index. And this basically measures the conforming limit homes. So people with conforming loans across the country, this is kind of what they use as their data. So you have a better idea. They're initially in April is at 0.9% growth. However, that did get revised a little bit higher to 1.1%. And for the month of March, it jumped up to 1.4%. So like its counterpart, it was also had a year over year from 12.2 revised to 12.4%, and it came in at 13.9%. So pretty hot numbers right here in terms of home price index, especially for the month of March. We saw an even bigger spike there. Now we also got consumer confidence. We had a really high number, the highest in since the whole pandemic happened at 121.7. However, we kind of lost that and got revised lower to 117.5 for the month of April, excuse me. Now, forecast was calling for 119.2, an increase. However, it dropped. Instead of going upwards, it went downwards to 117.2 for the month of May. We also got new home sales. We had a bright spot. It reached the million mark in the month of March at 1,000,021, and actually that got revised lower to 917,000. These are seasonally adjusted annualized units, and forecast was calling for 970, so it increased, and it dropped again to 863. And of course, a lot of this has to do with the price of lumber, home price, new home sales. They're saying the appreciation levels have been 20% increases due to the higher costs. They've been also having labor shortages, so they're having hard times even keeping up with the demand for new home sales. Since there's been such low inventory, a lot of people have kind of been moving over towards new homes as a result. But now they're also having a hard time, or at least waiting a long time to get those completed because, again, labor shortage has been a big issue along with the higher costs associated with the building, the construction costs, including especially lumber. We have all heard jumped over 200%. Let's take a look at the headline news, and stocks are down. It's taking its cue from the economic data. It didn't like the consumer confidence level, and HPI, of course, is good, but more importantly, the consumer confidence is quite important because we want to make sure that people are happy. If people are happy, they're out spending, kind of get the economy moving. If it comes down, then that means people probably won't be spending money and won't be moving along. So let's see how this is playing out mortgage-backed securities with interest rates. Yesterday, we broke above the 50-day moving average. We continued rising. I think you'll see some better pricing today as a result. As you see, we even did come back and test that, but we kind of bounced a little bit higher. So right now we're up 11 basis points. So lenders will probably come out with a little better pricing today as a result of this. It should be enough, including yesterday's increase, over from what we initially talked about yesterday, and I think you'll see some improvement in our pricing today. Here's yields. Yields have come down a little bit down. We're down to about 1.57. We broke about below its 50-day moving average, which was around 160. And yes, when we did this, we were right about 1.60, and now we're down to about 1.57. So we're down about 3 ticks so far this morning here as a result. All right, folks. Again, some good news for those who are looking to refinance or looking to buy. Rates did have a slight improvement today. These increments aren't like huge levels, so when I talk about slightly, I mean you're talking maybe we might see 1/8% in the rate in there. Otherwise, the points might be a little bit better price adjustment on there. Okay. Hope you guys understand. Hope you guys have a great rest of your day. I do appreciate you guys watching this. If you guys do like these videos, please smash that like button. I greatly appreciate it. It does help out the channel. And we'll look forward to see you guys in tomorrow's video. Take care. Bye-bye.